Hey guys, what's up? This is Francisco with Valarizo Capital, and on today's video we're gonna go through the weekly watch list for the week of November 21st. Remember that this week is Thanksgiving week, so there's a market holiday on Thursday, and also on Friday we're only gonna be open. The market is gonna be open only until 1 p.m. given that we have Black Friday. So remember that, especially if you're trading options, given that the premium is gonna last less. So if you're trading options, remember that, have that in your mind. And also, this week tends to be a low volume week given the holidays, and we tend to see that volume coming back into the market in the first week of December. So just keep that into consideration. We might see a lot of chop this week, so remember to be patient if we don't see any sustained moves either to the long side or to the short side. I'm gonna share with you the names that I'm watching. Most of the names that I'm watching are gonna be names that are related directly to the indexes, and also one that I have right now in my charts, which is UBXY. Remember guys that this video is for informational purposes only and is based just on my personal opinion, so it's not financial advice. And now that you're here, remember to like and subscribe, and also share this video so more people can find this information and use it as a tool for their trading analysis and also for their investment strategies. So let's start with the first name that I have here. I have the UBXY, and I want to share the UBXY with you because, as you can see right here, we are starting to see a breakdown below this very important level of 8.82. I do think that there is more. If you want to short the UBXY, I think that we're probably going to see more downside in this name. So I do think that this is a tradable breakdown, and you can use this level right here, this 910 level, or you can keep your stop a little bit more tight using that 882 level as your stop overall for the trade. And then the targets that I'm going to be looking for, this one right here, I'm going to be looking for this week. I'm going to be looking for that second standard deviation, which is close to that 1.272 Fibonacci extension that is measured from this swing low all the way to this swing high right here. So that's going to be the target that I'm going to be looking for the UBXY and the trade overall in the UBXY. Let me just remove these alerts so that we can look at the chart a little bit clearer. Now let's take a look into the next names, into the other names that I'm watching, and one name that I'm watching is going to be SARC, which is the inverse ETF for ARC. So the way that I'm playing SARC, I'm actually accumulating a position in TARC, which is the 3x leverage ETF in the same direction of ARC, meaning that if I want to short SARC, I'm going to be long TARC. So what is the idea behind this trade? So as you can see right here, if we also make a Fibonacci measurement from this swing high all the way to this swing low, we have the 0618 Fibonacci retracement, which tends to be a really strong level of resistance or support. In this case, it's going to be acting as resistance. Also, you can see that SARC, had a pretty strong, right? We had a fail attempt for a breakout, and we failed pretty rapidly to the downside. We lost that 200 SMA daily moving average in SARC, and what is happening right now is that we're having what some call a dead cat bounce. Why do I call that? Because we're seeing very low volume, and I have volume on another screen in SARC, and we're seeing that bounce coming all the way into resistance. So now what is the trade right here? You can see that SARC has rallied all the way to that declining 200 hourly. The declining 200 hourly is going to be that pink EMA in my charts, and you can see that SARC rallied all the way to test that moving average, and you can see also that the trend oscillator came all the way back to resistance. Right, resistance for me in the trend oscillator is going to be that midline at 50. So the idea here is to manage a position in SARC or in TARC using this level as your reference for a stop. If we happen to close above that level on a daily basis, that's going to be the stop for this trade. And then the targets for these trades are going to be all the way below here to 50. So I'm looking to risk very little on this trade all the way up here, and then looking for a target all the way down here. And also, if you are a follower of the squeeze, you can see that we have a squeeze and the momentum in the squeeze is below zero as well. Now let's take a look at the IWM, which I think is looking pretty interesting. And one way that you can play this one, you can play it with the leverage ETF, which is TNA. That's going to be the 3x leverage ETF in the same direction of the IWM. So what I'm looking at the IWM is actually pretty interesting here, because we had a pretty strong move to the upside, right? And you can see that I have all the Fibonacci levels marked in my chart. You can see that we have, right, measured from this high here all the way to this low right here. We have the first Fibonacci extension of 0.618 that is coming right into this level of resistance right here. So you can see why we saw, one of the reasons that we saw such an important level of resistance in the IWM. But what is actually really interesting in IWM is that we're starting to see consistently higher lows in the chart. So you can see that we're seeing these higher lows in the chart, and if you want to draw kind of a different pattern here, you can see that we're starting to form kind of a cup. Let me just take out those arrows. You can see that we're starting to form a cup, and we're starting to see those lower highs in what appears to be a handle. So what is going to be the trade here in the IWM? I think that the trade, as long as you accumulate your shares as close to that rising 21 exponential moving average using a stop below that 180 level, then I think there's going to be a great place to manage your risk, looking for moves all the way to that second standard deviation around 192, and probably we're going to see even a move higher all the way to that 1618 extension all the way to 195. But remember that keeping your targets as close to that second standard deviation is going to give you a higher probability of a profitable trade to the long side. So that's what I'm looking at the IWM. And then finally, let me show you what was the other name that I want to show you. Is going to be SMH. And SMH is starting to form pretty interesting here, because we had a move that came all the way into that declining 200 daily moving average. We had a really strong move from the squeeze, and we're coming right into resistance. But what is actually really interesting in the SMH is that we're starting to see a flagging pattern. So here you have the pole, here you're starting to see that flag forming in the SMH. What is interesting is that even though we had a really strong move into a very important level of resistance, we haven't break down below this 210 level. So one way that you can play this, and this is something that we mentioned already last week in these weekly watchlist videos, is that you can trade the SMH with a very tight stop right below that 210 level, or probably give it a little bit more room into that rising 21 exponential and that first standard deviation in the charts, and then looking for a continuation of this move all the way to the extensions of 2.33, that is the 1.72 extension, and probably all the way to 240 into that 1618 extension measured by the Fibonacci extensions. So I do think that this is going to be an interesting week. Probably we're going to see kind of a slow week. Let me go back to the first chart that we were looking at, the UVXY. I think that the probability that we're going to see a little bit of chop this week is definitely on the books. Remember that we have a short week once again, but the charts are looking pretty clean. There's a lot of bearish sentiment right now in the market, and of course that tends to be the case because we are still on a bear market. However, it's interesting to see that bearish sentiment in this move to the upside. We tend to see that bearish sentiment, more of that bearish sentiment when we are actually trading near the lows. So I do think that that's something that we have to take in consideration, meaning that if we happen to trade to the upside in the following days, that's gonna cut a lot of people off guard, and we're probably gonna see more acceleration to the upside. My thesis for this month continues to be very bullish. I don't see a reason to be bearish given that the UVXY is breaking down. The VIX also got rejected today, and let me show you that chart really quickly here. You can see that the VIX also got rejected at a very important level that we were talking about, which is 24. We continue to have a squeeze pointing to the downside, and we continue to have a bearish trend oscillator. So my thesis is that if the UVXY and the VIX continue to show this price action, bearish price action, I'm expecting a continuation of a rally in the SPY, QQQs, IWM, and SMH. And the way that I'm looking to play that is using the 3x leverage ETFs of the major indexes. So thank you so much, guys, for watching this video. I wanted to keep it super short and simple. This is going to be a simple week in my opinion, but my bias continues to be to the long side, not just based on my opinion, but based on the price patterns that I'm seeing on the chart. So once again, keep things really simple. This is going to be a pretty easy week to trade. Remember to like and subscribe, and also follow me on my Twitter account. Thank you so much, guys. Peace. Bye bye.